Welcome to the Deep Dive. Our mission here, as always, is to sift through the latest articles, research notes, and pull out those really important insights to get you well-informed fast.
That's right.
Today, we're jumping into KRBL Ltd. They're a huge player in the basmati rice market, you know?
A household name for many.
Exactly. We're focusing on their Q1 FY26 results, which just dropped on August 7th, 2025. We've also got their investor presentation and some interesting bits from their latest board meeting.
And like you said, we're not just reading numbers. We want to get behind them, understand the why of KRBL's performance, look at their strategy going forward, and cover some, well, pretty noteworthy disclosures that maybe hint at where they're headed next.
Okay, let's get started then. So looking at Q1 FY26, the quarter ending June 30th, 2025,
Yep.
they reported a total income of 1,617 crore.
Which is a big number.
It is, and it represents a 32% year-on-year revenue growth for this quarter.
32%, that's substantial.
And even compared to the previous quarter, it's up 10%, so pretty solid top-line figures all around.
Yeah, really strong start to their financial year. And what's interesting is how that flowed down, to profitability.
Right, tell us about that.
Well, their gross profit hit 415 crore, and the gross margin climbed to 25.7%.
Up from what, about 23% last year?
Exactly, 23.2% in Q1 FY25. And the main reason seems to be a lower average cost of goods sold for their basmati. So more efficient there.
Okay, better input costs helping out.
Seems like it. Then you look at EBITDA, that's earnings before interest, taxes, depreciation, and amortization, 225 crore. The margin there also jumped up to 13.9% from 11.4%.
Another good increase.
And finally, the bottom line, profit after tax, or PHIS, that came in at 151 crore.
Giving a tap margin of
9.3%. Which, again, is up significantly from 7.1% last year.
So across the board, higher profitability.
Yes, and part of that pay boost was also helped by much lower finance costs. They dropped massively.
How much lower?
Get this down 70% year on year. Just 1 crore in finance costs this quarter compared to 5 crore in the same quarter last year.
Wow, that's quite a saving. Really helps the net profit.
Absolutely. It means for every rupee of sales, they're keeping, a considerably bigger slice as actual profit.
And looking beyond the P&L, what about their balance sheet? How's that looking?
Very strong. They're sitting on a hefty cash and bank balance, 1,281 crore.
Okay.
And this is quite something, their net bank borrowings figure is actually negative 1,281 crore.
Negative, so they have more cash than debt.
Precisely. They're in a net cash position, basically zero net debt.
That's a fantastic position to be in. Gives them a lot of flexibility.
It really does. Also worth noting, their total inventory is down compared to last year. It was 3,688 crore, now it's 2,953 crore.
Ah, and lower inventory probably help reduce the need for borrowing too, right? Contributing to that net cash position.
That makes sense, yes. And if you want some external validation, the credit rating agencies like them, ICRA gives them AA stable, and CARE gives them A1 plus strong ratings.
Okay, so strong performance, strong balance sheet. How did they actually do it this quarter? You mentioned 2 growth engines.
That's right. It looks like growth came strongly from both sides, domestic sales in India and their export business, both fired up.
Let's break that down, starting with India, the domestic market.
Okay, so domestic revenue for Q1 FY26 was 1,063 crore.
Which is
A solid 15% year-on-year growth.
15% growth just domestically. That's still very healthy. What drove that?
It seems to be mostly robust volume growth in their branded business, their main brand, India Gate.
Right.
It held onto its pricing power, its realization, even while overall rice prices might have softened a bit.
So selling more bags of rice, basically.
Pretty much. And you have to understand just how dominant India Gate is here.
Give us a sense of that.
Okay, check this stat. India Gate is apparently consumed in 1 out of every 10 Indian households. Now, that excludes rural, but still.
1 in 10, that's huge penetration.
It is, and their market shares reflect that. Nielsen data for April, May, June 25 shows them with 37.9% in general trade,
Okay.
38.6% in modern trade, like supermarkets,
Right.
and a whopping 44% in e-commerce.
Wow, dominating online, too. So how are they sustaining this? What's the strategy?
They talk about a few key pillars. First is what they call democratizing distribution.
Me now.
Basically, getting their products into more stores and better quality stores.
Yeah.
They've seen a good bump in their distribution metrics. Numeric distribution up 1.2 points, Weighted distribution in traditional shops up 3.6 points.
So wider and deeper reach.
Exactly. And they mentioned launching 16 new C&F agents. Those are like regional logistics hubs and 8 super stockists to help serve smaller retailers better.
Okay, distribution sorted. What else?
Second, they're remodeling their supply chain, trying to make it more efficient, improve servicing, cut costs, the usual operational improvements.
Makes sense.
Third, a big one, investing in the brand. They've run some high-profile campaigns.
Like the one with Amitabh Bachchan?
Yes, the Taste of Indian Values campaign. That was across TV, cinema, influencers. They also pushed their top-class brand in Hindi-speaking areas, got lots of impressions, boosted brand equity, and ran a specific campaign in Maharashtra that also seems to have lifted brand equity and market share there. So lots of marketing muscle being flexed.
Seems effective. And wasn't there something about new products, too?
Right. Pillar 4. Foraying into new products and categories. They launched India Gate UP Life multi-source edible oils.
Edible oils, that's a step away from rice.
It is. They've got a Weight Watchers variant and a Gut Pro variant. They pushed it with a digital-first campaign, got over 7 crore impressions, reached over 8 million people, and actually managed to grab a 5% market share in the specific modern trade stores and cities where they launched by June.
5% share already. That's actually pretty quick for a new category entry.
It's certainly a promising start.
Okay, so strong domestic story, but you said exports were even more dramatic.
Oh yeah, exports really surged. The revenue there was 489 crore for Q1.
And the growth.
An astonishing 98% year-on-year growth, almost doubled.
98%? What on earth drove that?
They said it was primarily driven by bulk exports. But let's put this in context.
Right.
India itself is the world's #1 rice exporter, right? And absolutely dominant in basmati, holding something like 85% of global basmati exports.
85%, yeah, you mentioned that. Huge share.
And Indian basmati exports overall grew by 16% in volume last financial year, FY25. So KRBL is riding a strong national wave, but clearly outperforming it too.
What are the global trends helping them?
A few things. Growing demand for PUSA basmati, especially in the U.S., where KRBL seems to be doing well. The Indian diaspora globally helps popularize rice.
Right.
But a huge factor is demand from the Middle East. That region buys nearly 3/4 of all India's basmati exports.
So strength in a key market.
Definitely. And KRBL has specific strategies for exports too. They're launching economy versions, smaller pack sizes to get into more households, doing direct marketing in newer markets, like using Arabic TV commercials, and really focusing on the Horeca channel.
Horeca hotels, restaurants, catering.
Exactly, that institutional business.
Okay, so a really strong quarter fueled by both domestic execution and a booming export market.
That sums it up nicely.
Now let's switch gears a bit. The board meeting on August 7th, they approved the results, reappointed auditors, standard stuff, but there was something else.
Yes, something quite unexpected, perhaps.
Go on.
They proposed an alteration in the object clause of their Memorandum of Association.
Okay, what does that mean in plain English?
It means they want to add a new type of business to what the company's officially allowed to do.
And that new business is?
Real estate development and allied activities.
Real estate. For a basmati rice company.
I know, right? It sounds like they want the official power to acquire land, develop it, build on it, lease it, manage it, sell it. The whole real estate development cycle. Possibly with partners.
Why would they do that?
Their stated reason is to add a complementary growth engine to their main agri-foods business. The goal, they say, is to boost long-term shareholder returns.
A complementary growth engine.
Yeah.
Real estate. It raises so many questions, doesn't it?
It absolutely does. Are they looking at land they already own, maybe near their mills or warehouses? Would it be industrial parks, warehousing? Or is this a totally separate venture into, say, residential or commercial property?
Leveraging their financial strength, maybe? That net cash position we talked about?
That's a strong possibility. It's definitely a bold strategic pivot to watch.
Very interesting. Okay, now, one more thing from the reports of the auditor's review. You mentioned a qualified opinion. That usually flags something important.
Yes, it does. The auditors, Walker Chandiak & Co. LLP, issued a qualification. It relates to an ongoing investigation by the Directorate of Enforcement, the ED.
Under the Prevention of Money Laundering Act, PMLA.
Correct. Now, we need to be careful just to report what's stated. The core allegation involves the company's joint managing director and the Augusta Westland case.
Okay.
The ED alleges that a specific company, Ms. Rawasi Al-Khalij, General Trading LLC, or RNHET,
RKGC, got it.
supposedly received funds tagged as proceeds of crime amounting to about USD 24.6 million back between 2008 and 2010.
Okay. And the alleged link to KRBL.
The allegation is that this money was then supposedly transferred to KRBL via its subsidiary, KRBL DMCC.
I see. That's a serious allegation. What's the company's position?
KRBL states that they hired an independent professional firm to look into these claims. Based on that firm's report, KRBL's board decided no further action was proposed.
So they investigated internally, or via a third party, and felt okay.
That appears to be their stance. The case itself is still pending in the special court. The next hearing date mentioned was August 12, 2025.
So it's unresolved legally.
Yes. Management, however, has stated they're confident, based on legal advice, that they have a favorable case. They believe no adjustments or extra disclosures are needed in the financials because of this.
And the auditors qualified their opinion because the matter is still ongoing and the final outcome is uncertain, presumably.
That's typically why auditors issue qualifications in such situations, an unresolved uncertainty with potential financial implications.
Was there anything else related to the ED?
There was a brief mention of a separate older ED case involving a piece of land in Dhuri, Punjab that had been attached.
Okay.
But the update was positive for KRBL. They got physical possession back, and an appellate tribunal ordered the ED to refund about 11 crore that KRBL had deposited earlier.
So some resolution on that older issue.
Seems so. But the main qualification relates to the ongoing Augusta-Westland-linked investigation.
Right. Okay, so quite a lot to digest there. Let's try and summarize the key takeaways for you, the listener.
Good idea.
First off, KRBL had a really strong Q1 for FY26. Great performance.
Definitely. Powered by growth both at home in India, thanks to that strong branding and distribution,
Yeah.
and a truly remarkable surge in exports, almost doubling year on year.
We also saw them pushing into new areas like those edible oils, which seem to be getting some early traction.
A sign of diversification within the food space.
And then the big strategic curveball that proposed move into real estate development, adding a whole new potential business line.
Yeah, that's the really fascinating one to watch. What does a basmati giant see in property development?
Absolutely. Which leads us to that final thought we want to leave you with.
Hmm.
Consider this. How could a company like KRBL, so deeply rooted in agriculture and consumer goods, actually use its financial muscle, maybe its existing land assets?
Right. Those strategic locations, perhaps?
How could they use all that to succeed in something as different and complex as real estate?
And what does this potential shift really tell us about their long-term thinking? About diversification, maybe resilience, in a market that's always changing?
Something for you to mull over. We hope digging into KRBL's latest updates has given you some valuable insights today.